Hey, good morning, everybody. Today is Wednesday, February 18th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. The Russell 2000, Nasdaq, and S&P 500 again closed above short-term resistance and are all now in short-term uptrends. The next few trading sessions will be critical to see if we can sustain the current move. Let's start by taking a quick look at the Russell 2000. What we're looking at here is a weekly chart of the Russell 2000. You can see that back in March of 2014, the Russell 2000 put in a high that acted as resistance over the next year. We came up against resistance on several occasions and couldn't better it until last week when we finally broke above resistance in the 1213 area and then broke above tiddling resistance right here in the 1222 range. I've thought for a while that the Russell 2000 was the key to the market going forward. So as long as the Russell 2000 can hold above that resistance in the 1213 range, which actually at this point should become support, I think that going forward the markets will work their way higher. Let's take a look at the Nasdaq Composite. We're going to start this morning with a little bit longer term look at the Nasdaq Composite because I think this is important. What you're looking at right here is an intermediate term trend line. We derived this trend line by connecting this low point with this low point. And what we want to do with that trend line is create a channel. So we simply copy this trend line up to the highest point after the start of the trend line to create a channel. And the reason that's important, going back to a daily chart, is that right now the S&P 500 is bracketed between support at the prior high in the 4811 area and this upper trend line that we just looked at in the chart. Yesterday, the Nasdaq Composite closed up 5.43 points, or 0.11%. Trading volume was below average and a little bit lower. It was kind of a non-committal day yesterday. Right now, on the Nasdaq, we're still on a margin signal on our 1 to 6 month timing model. Taking a quick look at the MACD histogram, we see this bar at the right edge of the chart is above the zero line, that our MACD histogram is trending higher. MACD histogram trending higher gives us a bullish signal. MACD being above the zero line gives us another bullish signal, and so our short-term bias on the Nasdaq Composite right now is bullish. Take a look at the S&P 500. The S&P 500 yesterday was up 3.35 points, or 0.16%. S&P spent most of its day trading below this area of resistance / support on Tuesday, but managed to close above it and close really at the very top of its trading range, which is kind of bullish. Trading volume was uninspired, closing below average. We may have actually traded a little bit heavier volume than the prior day, which would give us an accumulation day. We've had a lot of accumulation in the market since the market confirmed the recent uptrend. If we call yesterday an accumulation day, that gives us 1, 2, 3, 4, 5, 6, 7 accumulation days in the past month. Over that same period, we only have these 3 distribution days. So the market appears to be in pretty good shape here. Right now on the S&P 500, we are on a margin signal on our 1 to 6 month timing model. We still have resistance in the 2094 area. I don't believe that we've cleared that resistance by enough at this point to call it support yet. Taking a quick look at our MACD histogram, we see the MACD histogram at the right edge of the chart is trading above the 0 line, which is bullish. It's trending higher, which is bullish, which means our immediate bias on the S&P 500 is bullish. Yesterday we bought China Biologic products and Twitter for our aggressive trading portfolios. China Biologic Products is a Chinese developer of plasma-based pharmaceuticals. Yesterday, it broke out of this base area right here. Trading volume was very heavy. It was well above the 140% of average daily that we look for. Right now, our stop on China Biologic would be 7% below this high right here, and a better prepared analyst would tell you exactly what that number was, but I don't have that number right in front of me. Let's take a quick look at Twitter. What we're looking at here is a weekly chart of Twitter. You can see we have this trend line, which runs from December of 2013, all the way through today. Last week, at the end of the week, we broke above that trend line on fairly solid volume. The volume the prior week was actually better, but that was also a significant up week. And so we bought Twitter on the break above this trend line. We will set our stop, our immediate stop, at the trend line. If we broke 3% below the trend line, we would be out of Twitter. If you want to talk about China Biologic, Twitter, about the markets, or any of our trading strategies, please feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the home page. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, please take a quick look at our disclaimer video posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.